Today, I'm going to be revealing my Bitcoin bull run strategy and what I'm going to be doing to maximize my returns in this bull market and take profit at the end of the market. Now, it's no doubt that Bitcoin is currently in a bull run and has been in a bull run since January of 2023. We've seen gains all the way from $16,000 in January 2023 up to $73,000 as of today's price, nearing an all-time high for Bitcoin. And in today's video, I'm going to be breaking down my current strategy for number one, getting free exposure to Bitcoin, and number two, maximizing my returns this bull run, not just for Bitcoin, but other cryptocurrency assets. Because the beauty of this is Bitcoin drives the entire market. So with Bitcoin being up 4.1% in the past 24 hours, Ethereum has witnessed some gains, up 2.7% in the past 24 hours. Link is up 5.2% in the past 24 hours. Render is up 4.8% in the past 24 hours. And a lot of other altcoins are up as well because Bitcoin leads the entire market. Now, with that being said, I want to address why we're all here. Is Bitcoin going to continue to go up, or are we going to bottom out? Well, today it's October 29th. The US presidential election is on November 5th. Now, depending on when all the presidential election votes are counted and they have determined the winner of the presidential election, that's the point where I think we will see some volatile price action. I think we can easily start to move up a little bit more. And then I also think that we can easily start to move down a little bit more. Because if we take a look at the Bitcoin halving process, you can see all the way back in 2020, we really started rising after that presidential election. Over here, it wasn't as relevant in 2017 because Bitcoin was not as adopted, but the same exact thing applies. It took us a little bit after the halving until we started going up. So I think assuming we follow this model, we will see some good price action leading up to the election. And depending on how the election goes, the market could completely take off in November, December, January, February, March, April of next year. So what I'm doing to prepare is I'm taking all the earnings from my DeFi positions. Two of the ones that I'm in right now are Ethereum to Aave as well as Ethereum to ATH token. And I'm just compounding that income, not back into the positions themselves, but into assets like Bitcoin as well as Ethereum, because those are the ones that have a high probability of running this market. I'm currently generating about an 82% APR, which means off of the $27,000 that I have just in these two positions, I'm generating roughly $60 per day that I can then go and put in Bitcoin, Ethereum, and other positions. I also have positions over on the Solana network with about $10,000 of capital and other positions in DeFi that have another $10,000 to $20,000 of capital that aren't tracked on this dashboard. Additionally, I have about $50,000 in my HODL portfolio. So to break it down, I want to talk about what I refer to as my hybrid model. Now, if you guys want me to talk a little bit more about my hybrid model, I recommend you drop a like and subscribe and notifications turned on. I'm also going to be hosting an entire workshop on my DeFi hybrid model in my DeFi Excel community, which is currently only $30 per month, discounted from the normal rate of $100 per month. Now, there's no lock-in for this. You don't have to jump through a ton of hoops to unsubscribe. All you have to do is subscribe and click a button if you want to unsubscribe. But I'm confident you guys are going to enjoy it so much that you aren't going to unsubscribe, and that's why we give you that freedom. But DeFi Excel will help you invest into your first couple DeFi positions. You'll gain world-class education on liquidity as a service, which is what we're talking about today, as well as you'll get a free 30 days of Metrics Pro, which is the best DeFi software out there. That's all done through this community right here for only $30 per month. But I'm not going to talk about that. There's a link to it down below in the description if you want to check that out. I want to dive into this hybrid model, the high-level overview of it at least. The hybrid model is where I have a portion of my cryptocurrency in my DeFi portfolio and another portion of my cryptocurrency in my HODL portfolio. Why don't I just put it all into DeFi? Because DeFi has something known as opportunity cost, or otherwise known as divergence loss, or also impermanent loss. These are a ton of different terms that you can use. Opportunity cost is probably the best one to describe it, but opportunity cost is when you get sold out of the better performing asset into the lower performing asset. That's exactly why you don't want to put all your cryptocurrency assets just into DeFi. You want to run a hybrid model where you have maybe half and half, and you use the DeFi portfolio to build up your HODL portfolio. So what I personally do is I have about $50,000 across my DeFi positions right now. I take the income from my DeFi positions and I add it over here into my HODL portfolio. I buy speculative assets that might grow 10, 20x. I also buy blue chip assets like Bitcoin and Ethereum, which is what I've been doing recently to make sure that my portfolio is in balance. But by using the income from that $50,000 portfolio, I'm getting free exposure to Bitcoin, Ethereum, and other assets. And this 50K, as you just saw from me, is generating 80% APR on average. And that's also the same APR that I've been doing for the past 3 to 4 years that I've been investing into the DeFi space. And if we really broke down these numbers, 80% APR on $50,000, that's 40 grand per year, which means that you're making roughly $110 per day, which is just above $3,000 per month in income off of $50,000. Now, I know some people that can live on that live in other countries like Colombia, but I also know that that would be a really, really good supplement to a lot of your guys' current income. So you could use that as a way to have more money in your pocket, or you can play the long game where you take that $3,300 per month and you build up your HODL portfolio. The reason why you might want to do that is because guess what? If you're expecting your 50K in your HODL portfolio to maybe go 3x from here, because the bull run has progressed already a little bit, right? But if you're expecting that 50K to go to, let's just say 150K through altcoins and other assets like Ethereum that maybe haven't seen a ton of run, well, if it takes 6 months to do that and you're able to collect $3,300 6 times across 6 months, that's an extra $19,800 that you are getting in income, right? But keep in mind, $19,800 is added to that 50K. So when you go 3x, you are now going 3x on that $19,800, which is nearly an extra $60,000 in your portfolio, which would bring that over to $210,000. This right here is my DeFi hybrid model, compounding that income back into my HODL portfolio where I have full exposure so I can maximize my returns this bull run. Now, one of the strategies is investing into these DeFi liquidity pools with speculative assets like Ethereum to Aave or Ethereum to Aether token. I also have some sold USDC positions, which do cap my gains because of opportunity cost and that divergence that we talked about. But also at the same time, they produce substantial income and they are lower risk. And then I just take that income and I throw it back into those HODL portfolios. But then the other strategy is where we can use lending and borrowing platforms. If we were to go over to Aave right now, we can collateralize different derivatives of Bitcoin. Like currently, I have about $12,000 of wrapped Bitcoin over on the Arbitrum Aave market. I can collateralize these assets. So let's just say I were to do that with $50,000 of Bitcoin. I would have $50,000 of Bitcoin as collateral / a lend because people can borrow that. And then I'd be able to go and borrow a decent chunk of USDC or another stablecoin. So if I was borrowing, let's just say 25K in a stablecoin, I can then go and take that 25K and put that right into these DeFi positions that are producing me income. Liquidity as a service is what we call it. And if those are producing me, let's just say that 80% APR through DeFi, I take that 80% APR and I can, number one, buy Bitcoin, which is probably what I'm going to do because I'm more bullish on Bitcoin. And I take that Bitcoin and I add to my collateral stash, and then I can create that flywheel of borrowing more. Maybe I get that up to 30K and repeat the process. The beauty of this is I'm kind of cutting out divergence loss. Yes, I'm going to have divergence loss in my DeFi positions or that opportunity cost. And there are scenarios where it does matter, like on the downside, for example, but that position isn't what I'm hoping to appreciate. I'm hoping for this 50K right here to appreciate, and that's what I have full market exposure to. If I had one Bitcoin as collateral over here, assuming Bitcoin was worth 50K, I really wish it was, because then I would be able to lock in a very solid buy-in. But assuming we have one Bitcoin over here, basically, if Bitcoin goes to 60K or 70K, of course, well, guess what? That one Bitcoin is going to 60 or 70K, no strings attached, no divergence lost. That 25K, which is in USDC, is remaining fixed, right? So our collateral goes up, our borrow stays the same, but then our DeFi positions will slightly go up because we don't have full exposure over here, but they will also produce us that 80% APR, which we can then use to buy more Bitcoin and put that Bitcoin as collateral. This right here is part of my DeFi hybrid model, having both a HODL portfolio as well as a DeFi liquidity as a service portfolio. And that's exactly how I plan to maximize my returns this bull run. Use my assets to make more money and compound that money into my HODL portfolio, gain more exposure to Bitcoin, Ethereum, Solana, and other cryptocurrency assets that I believe in. If you guys enjoy content like this, make sure to drop a like, subscribe, notifications turned on. I am going to be hosting a DeFi liquidity as a service hybrid model workshop in my DeFi Excel community, which is linked right below this video if you guys want to check that out. I'll see you guys in the next one, and peace out.